Stocks continue to celebrate the Trump win, and now the extra kicker has come from the US Central Bank, the Federal Reserve, cutting interest rates by 0.25% as expected overnight. Welcome to the Daily. My name is Jessica Amir, a market strategist with Mumu. Well, it's the second time the US Central Bank cut interest rates this year, with the bank last cutting interest rates by 0.5% back in September. And this is all positive for stocks. Why? Well, historically, the stock market rallies 6 months after the US Federal Reserve cuts interest rates. Why? Well, it promotes economic growth, consumer spending, business spending, and all in all, it boosts company profitability. So what indices and stocks do you need to watch? Well, the Nasdaq 100 has continued to hit another new high. It rose 1.5% overnight, taking its gain to 28% this year. It's gained $1 trillion in market value just in the past month so far. The most valuable and traded stocks on Wall Street continue to extend their gains from the Trump bump yesterday. Nvidia, Apple, Google, they all rose over 2% each overnight. While down under in Australia, our Aussie share market is higher too. It's up by about 1%, as at the time of recording this video. It's now about 1% away from hitting its record all-time high. Mining companies are up the most today. As for what stocks are moving the most, well, gold. The gold price has risen 1.4% thanks to the US dollar fading away, and that's allowed gold producers to rise up. So De Grey Mining, Bellevue Gold, Evolution Mining, all their shares are up 4% today on the ASX. Meanwhile, interest rate cuts are benefiting uranium stocks globally and on the ASX as well. Deep yellow shares, they're up the most on the ASX today, up 6%. Boss Energy is following. And guess what? The uranium ETF, URA, that's the world's biggest tracker of uranium, that appears to be breaking higher after ending its downtrend. So keep an eye on that ETF. Now, what's ahead? Well, stocks are on a bullish runway indeed for 2025. Why? We've got the US economy growing quicker than expected. The Fed alluded to that overnight, and the Fed is cutting interest rates, and we've got US company earnings growing far more than expected. And we've also got Trump expected to reduce regulation. And last but not least, the Chinese economy is stimulating its economy. So tick, 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 tick. This is a great concoction for the share market, indeed for long-term growth. But one investment advisory group, Evercore ISI, came out overnight saying the S&P 500 might actually gain 11% over the next 6 months. But I just would urge a bit of caution here, particularly because we did hear the Federal Reserve chair overnight saying that inflation is sticky. Also consider Donald Trump's new policies will, of course, create greater economic growth, but this means higher inflation. The problem with high inflation is if it's too hot to handle, the US Central Bank could rise interest rates again, and that could cause a bit of pressure on stocks, meaning you might expect a bumpy 2025. So to preserve your wealth amid the bullish but bumpy 2025 runway, you may want to consider taking profits from those stocks that you're in, or maybe indices, just to really preserve your capital. Now, what else is ahead that you might like to keep your eye on? Well, China's top legislative body is expected to release plans today to increase expenditure for next year. This will hopefully be positive, another win for commodity stocks. Also, keep an eye on banking stocks. HSBC is expected to announce another round of job cuts within weeks, while Goldman Sachs is going the other way. They're appointing new partners. They've just appointed their largest ever number of female partners in their history, hiring 26 women in total, a part of the 95 new hires they've just made. And that's the Daily.